Good evening, guys. Welcome to another daily market review video. So I'm going to walk you through today's price action during New York session and let's dive in. So here, let me annotate the S&T divergence. There's an S&T divergence. This is on the 1 hour chart. Actually, let me go down to 15 minute. So there's an S&T divergence at the lows here, which acts as a drawn liquidity once the market gets into the sell model. So I'm going to annotate that as my sell side. Draw it in time. And then what I'm going to do is, because the market rallied before New York open, this is overnight price action during London, and immediately after it reversed, right? So it faded the whole rally, and in that rally there is a trap here. There's not S&T divergence, but there's a trap, which is a smart money reversal. So in that case, this means market set a high, and then we need to look and find for a low, and this is the first S&T divergence there is in the market. So you establish a dealing range from the sell side S&T low all the way up to the trap, and you got to work in this framework. Now here, if I zoom in a little bit, the sell model on the 15-minute was completed before market close today, but I'm going to dive into lower time frames to see what happened intraday. So here, before New York opened, it was trading below a BISI, and there's overlapping SIBI, and there's overlapping BISI. So you can take all whole as a BPR, right? So I'm gonna do, which is also premium PDRA. I'm gonna say premium BPR. I'm gonna keep that on the chart when I go down to lower time frames. So here, let me do this work. So now we have buy side liquidity above the trap and sell side liquidity below the S&T lows. Now let's go down to the 1 minute chart and walk through the whole New York session. Okay, let me clean everything from today. All right, so here, this is the New York open. At New York open, market ran all those highs on NASDAQ. Here it ran all the highs, okay, and this is algorithmic delivery because it is rejecting the BPR and the buy side liquidity on the 1 minute. You can see the body is closing below, and immediately after it tried to rally one more time with this down close candle, but engulfed the up close candle. So there is turtle soup going on right in premium. Now, because market is in the sell model on the intermediate time frame, we're looking at the 15-minute drawn liquidity, 15-minute sell side, right? And we are trying to get a short in premium, basically. So here, market opened, dumped, initially reacted from the range EQ. This is also a 15-minute S&T divergence. So there's an S&T here, got the highs on the 15-minute. Let's annotate that too. Then it broke down. There's a displacement, but there is also a dealing range, the range equilibrium, right? It overshots the fair value gap into range EQ. Now you can adjust the range equilibrium because the S&T sets the high, right? So this is the high, and if you have a target down here, you can imply a dealing range even though it's not established. So you can take the fib from the high to the target. Now you can look at this dealing range as well if you want to. Now I'm going to keep that for later. Here, the market maker model dealing range at 940, retested several times. There's also an order block here, and then immediately after it sold off. Now here's the tricky part, because it never tagged the sell side actually, so it left it for a later time. And that's the ugly part of the market. Here what happened was So it actually accumulated below the fair value gap, inversed it, right? It trapped the market. So once the trap is there, now you should ditch, and this is what I didn't do, but you should ditch the um, sell side ideas, because it's going to be a trap fair value gap, let's call it. And there's a trap here from the bodies down to the sell side. So what that means is that low that was set at New York Open is a safe low until the order flow supports the idea of going short. Okay, and it during the day, like intraday, it could try to go below, but this is a thick price action at the end of the day, and it's going to cause a high support. So it'll go back and forth before it knocks it out completely. Now here though, that didn't happen because of a reason, and the reason is after the trap was set, market formed, like displaced. It formed one fair value gap, second fair value gap, so multiple fair value gaps, and in that fair value gap, let me pull up ES and 1 minute. Oops, 10 o'clock, where are you? Alright, here. So within this price action here, while it was accumulating in the BISI, what happened was it formed an SMT divergence. Now that is telling me that the trap is there, first confluence, displacement is there, second confluence, market is overall bullish, third confluence, and then a manipulation within a fair value gap is the fourth and the biggest confluence in my opinion. Okay, so it formed an SMT divergence, and that is like after the formation of the divergence, now you can actively seek for long entries. Okay, so here, let me annotate this as accumulation FVG. But the most important thing here is that the market formed a divergence, okay? And once it's there, now you have a buy model. Where's the buy side? The highest probability buy side is the closest probability buy side, which is the high that was formed at 9:30. Okay, I'm gonna take this as buy side. I'm gonna draw it in time. So here, S&T divergence sent the price above the range EQ, right? And then it came down. Now that is another dealing range. Though. Now you have a short-term dealing range from the high to the S&T. This is one setup for life. I'm gonna delete this for a second. This is one setup for life. Okay, that's in the video that I posted on the weekend. This is the setup you're looking for that specific context or content. Okay, you let go of the first initial move, you trade the second leg, then it came down into range EQ, and there is an SMT at the highs here, as far as I remember. What that tells me is not that it's bearish, but it means the high is set. Now you can look for a dealing range. Okay, that's what it means. So here, if I'm not mistaken, yes, ES didn't make a high, so it came down into range EQ. I'm gonna do this because I'm gonna take screenshots of these things for the channel. Short-term PR. So it came down to range EQ, right? The S&T divergence sent it lower, and it started accumulating, right? So the price started stalling. Here, it formed a new trap. There's a CB accumulation, flip the CB. Now you have a trap. The low should be safe. Now, this is what I did do wrong during the market, but it's okay. Now you have a new trap. Let me annotate that as a trap. Because there's a trap, that means the low is safe, okay? It's not because it's an order block or whatever, but you can use the order block as well. So the order block in this case, in this accumulation, will be which one? It's going to be the lowest down close candle here, this one. And then you also need to look at its mean threshold, Okay, so I'm going to annotate the mean threshold. As you guys can see, it came down into mean threshold. There is also the rejection block here. Came down to the rejection block as further manipulation, and afterwards it sent it to the buy side here. Okay, so let me quickly take a screenshot of this for the channel. Trap FVG. I favored the trap fair value gap was during the live session. I was favoring the trap fair value gap should have been respected, but I was wrong about it apparently. But it's what it is. I'm not like mad or anything because the reward was not that big anyways. So it was like 25 points. So I was looking at 2R trade over there. So let me take a screenshot of this for the channel. Okay. Now let's move further. Now the buy side was taken out and it was consolidating, right? Now you have a new dealing range at this level. From the trap, which is the smart money reversal, all the way to the high. Now you have this dealing range, okay? Now you can look for this dealing range to hold if it wants for bullish delivery. So it went back and forth because this is a small range. It went back and forth quite a lot between discount and premium. But initially, I mean, after all, what it did was it formed a trap here, and there was an S&T divergence as far as I remember. Let me see. Yeah, so here, as you can see, ES was making lower lows, whereas NASDAQ failed to do so. So that became what? That became another smart money reversal, which is the traditional one here. I'm going to annotate this as SMR as well. So this is what this is telling me is it wants, or the market wants, buy side delivery. And the buy side delivery, you have what? You have a short-term buy side, and then you have old highs as well, like here, for example. Today it didn't go there, and I'll cover why it didn't. So it rated the short-term buy side. I'm going to change this to PD. It rated the buy side, then short-term buy side immediately after it sold off. Let's see what happened in between ES and NASDAQ. There's no S&T divergence there, but there is an S&T divergence on a higher time frame. As you can see here, I'm going to go on the 5. As you can see here, ES did not make higher highs, whereas NASDAQ did, and this was also 3 drives on a higher time frame, which I'm not going to be talking about in this section. But it was 3 drives. So here, first run, and second and the third one. So that is 1, 2, and 3 on the 15 minutes. Okay. You can always amplify the 1 minute look for high time frames. I think you guys will get better at that over time by looking at 1 minute chart where like as often as I do. But afterwards, like you don't have to look at, for example, the 15 minute time frame to see which time frame the S&T occurred, you know, or the 3 drives also. So here, this was the third high on the 15 minute. This is seek and destroy also. It goes for the buy side, then it comes down and it inverts the market. This is smart money reversal. I think what happened there was it came down to this dealing range here. This is the range EQ. This is I would say 5 minute range though. It wasn't that clean. So the S&T was on the 5, as you can see. This is the high, came down to range EQ. That's the 5 minute though, it's not on the 1 minute. So that sent the price higher one more time, one last time. This is a 3 drive high, 3 drive, 15-minute, and then market sold off in that price action. Let's see if there is any divergence. So here, as you can see, it's on the higher time frame. There's no divergence on the one. But the clue is price accumulated here, right? And it kind of lost the momentum or the speed, the pace. Here there's the fair value gap, accumulation above it, flipped it. Here, I'll zoom in. Flip the fair value gap here, and then it's sold off. That's the confirmation of the trap. So I'm going to do, this is the golden zone or trap fair value gap. And then the high here became trap. Clean highs though, very suspicious. So once that fair value gap was inverted, now we're looking at what? We're looking at sell side. Where's the sell side? The highest probability sell side is the S&P divergence. Okay, that is your first partial. But before pulling that, let's do this. Now you have a sell side, and this is the 5-minute market maker sell model. Like I'm right now I'm looking at it on the 1 minute, but while I'm looking at this on the one, I know that it is not the 1 minute model. Okay, because the 1 minute model will be targeting what? It's going to be targeting maybe there's an S&P divergence here, and that's the 1 minute objective. Sell side. So as you can see how it aligned. So even though it rallied, so initially 1 minute buy model was completed. Then it formed a 5 minutes sell side, but overall we have a sell model on the 15. And once it all got in alignment, then we saw the low resistance run on the sell side. Okay, so here what we have is we have a new dealing range for the 5-minute target, which is this one. So it broke down, fair value gap here. I'm going to annotate them. I'm going to annotate all the fair value gaps so you guys can see it too. Then there's this one, which got inverted. This is the premium fair value gap though. Oopsie. Premium FVG got inverted, touched all the way up here. And the reason for further manipulation here is the market is actually using the short-term dealing range here, this one. That's why it's overshooting. It's using this one and forming a further smart money reversal here. Because initially what happens is it's set up for a trap. So this became a trap initially. Then though, as you can see here, at like literally right at the range EQ, it formed a new trap. Now you have trap shorts and trap longs. You follow the second one. Okay. Then it inverted this trap, the trap fair value gap rather. Okay. This is the last premium fair value gap, and immediately after it sold off. And these are the PD arrays. And delivered to sell side. Now I'm gonna take a screenshot of this and I'm gonna walk you through. So now remember, initially what I said was the market is in a 15-minute sell model, right? Now what you can also do is, which is what I did while I was looking at this sell-off, was once the chart was there at the high, right? What I did was I looked at the high as my expansion leg high. Okay, so the high set. Then I pulled my fib So I'm implying a dealing range all the way down to the 50-minute target. Okay, now I imply the range. What I'm looking at here is basically I'm letting go of the first leg, I'm letting go of the second leg partially. Now I'm waiting for price breaking below the range EQ here, and as you can see at 224 it breaks down, and then one more time further damage, then it goes up. Where does it go? This is the very last premium fair value gap. This is my favorite type of entry, for the record. It always gives sniper entries because the last premium or the last discount fair value gaps will generally be IFED, okay? Because price will want to rush. It'll want to rush, so it came down to, let me annotate this as a draw sell side. So, touches the fair value gap, sells off. Low resistance run, delivers within literally like 12 minutes or less, 10 minutes I would say, and the very clean delivery. 60 points, all down close candles, okay? If you miss this, you let it go. If it was giving any entries in this level, in these levels, you let it go, okay? You never want to short into discount, especially on range bound days. You can technically do it on trending days, but you don't want to do it on range bound, okay? So here the sell side was taken. Now you have, oh, hold on, actually, let me take a screenshot of this. Okay. So the sell side was taken out. I'm going to clear everything. Now we have a new dealing range. The low all the way to the high. Now we have buy side here, which is clean highs. There was no like smart money reversal or whatever. I mean SMT divergence. This becomes the buy side. Then let's do OC. Then once the low is set, this becomes the sell side. So now you have a new dealing range that you can operate. If it gives buy signals, okay, you can grab any long entries below that dealing range, so this portion, which is discount. If you miss that, don't touch it in here, okay? Even if it gives an entry, don't touch it. So here, what happened was price consolidation below CB, flipped it, retest, send it higher. Now we have displacement, trap, so I'm going to annotate that as trap. Here, this is the trap. And the fair value gap, I would say, I mean, it's a tiny one. You can use the lower one as well. Didn't touch the lower one though, apparently. So flipped it, retest, and send it higher. So you have potentially a smart money reversal, and the market is potentially in buy model. Okay. Now as it expands, you keep watching it. Now, what happens is, try to rate the lows. In micros, it did, by the way. This is not equal lows. Now I was waiting for an SMT divergence here with the S. That would be a very, very good long entry. Didn't do so, so I let it go. It expanded further, but here's the thing, guys. On the first leg, after a trap without SMT divergence, if market doesn't manipulate, so meaning doesn't cause an SMT divergence, you can actually wait for it. So anticipate that divergence before going into trade, okay? So here is that divergence. I'm gonna put ES so you guys can see it. Ooh, where is that? Where is that? Okay, here. This is the only and the last SMT divergence. Now you have a long entry, okay? Not before. You can do it before, but if you do it before, you are taking the risk of getting manipulated. And if you have a tight stop loss, you might get wigged out. But if you don't want to get wigged out and have a tight stop loss, you wait for this. And because there's a trap, because there's confluence, you could actually turtle soup the SMT divergence, okay? The first SMT divergence. Or if you don't like to buy into short-term sell signs like this, you can do a couple of things. Like you can look at the discount PDRAs, for example. There's a discount fair value gap here, okay? You can use that. It's the same thing. Then you put your stop loss below this lower here, okay? And then it's sent the market towards buy side. Now let me annotate this as well, and not annotate, rather take a screenshot of this. And immediately after, like within 5 to 10 minutes, during the last 10 minutes of the session, it sent the price higher and closed the market very strong. I think what we're looking going into tomorrow is, so we have new lows here, okay? This became the new sell sign. I'm going to do it the dealing range because it's irrelevant right now. The buy side is taken. Now we're looking at this dealing range here on the 1 minute. What I'm expecting is price coming down here, somewhere here, and then forms a buy model to target the buy side on the short term. On the higher time frame, I gotta delete everything. On the higher time frame, I think the game plan has not changed yet. Sell side was taken today, rejection block. Now we have a fair value gap and order block. I think we are still looking at the short-term buy side first, and after that delivery, it's going to be all-time highs. So far, this is the highest probability target for now. Just go step by step. All right, that was fun. That was fun. So here, I'm going to annotate this delivery too. Premium, fair value gap, and break broke below EQ. Okay, let's take a screenshot of this. Here I'm gonna do this. Just trying to make it as clean as possible for the screenshot, basically. That's what I'm trying to do here. This. Here. And then this is the range EQ. I'm going to actually annotate that the same way. And I'm going to draw this in time. Okay, perfect. This looks good. I'm going to do this like that. So we can have one whole session in one chart. Cool. And this one as well. Let me just annotate that. So hold on. I think I was looking at something else here during the live session. I think I was implying a range here or something. I don't remember now. I need to watch the recording. Here's the range EQ down. Okay. So thanks for tuning in, guys. I'll be uploading this shortly, if YouTube allows me, and I'll be uploading the recording shortly after. It takes forever, unfortunately, but again, not because of me. I swear, guys. It's YouTube takes forever, literally. But anyways, thanks for tuning in today during the live session. Thanks for watching this video. I'll see you guys tomorrow.